All right. Like I said, I'm going to be sharing my screen with you guys so that you will understand how I specifically trade the forex market. Now, I'm going to read out my trading plan, how I trade. Now, I have my trading strategy, which is the MAEE strategy, price action formula. Then we have the edge, risk management, and discipline. So what is MAEE strategy? So this is it. MAEE trading strategy is used by price action traders to trade the forex market. This is a trading strategy on its own. So once you master it, you don't need any other strategy because this is the strategy that professional price action traders use to trade the forex market. So with this, you don't need to be looking for strategies. You don't need to be searching for the best strategy. Once you master this, then you have a strategy. That is why my strategy is the MAEE strategy. So this is what it means. M stands for market structure. So what is a market structure? A market structure can be an uptrend, a downtrend, or ranging. That is what the M stands for, market structure, uptrend, downtrend, and ranging. So if I want to trade, the first thing I do is to look at the market structure. I will look at the market to know whether if the market is in an uptrend, if the market is in a downtrend, or if the market is just ranging. If the market is in an uptrend, I'm only looking to buy. And where do I buy? I buy from the support level, which is the pullback. If the market is in a downtrend, I'm only looking to sell. And where do I sell? From the resistance level, which is also a pullback. But if the market is in a range, I will use two horizontal lines to map the range, the highs and the low. So if the price comes to the high, I take a sell trade. If price comes to the low, I take a buy trade. So this is what I mean by market structure. Then after that, we have the A, which stands for area of value. So what is area of value? Area of value can be referred to as support and resistance level. The level where traders are waiting to take their trade. It can be a horizontal support and resistance level. It can be the 50 EMA, that is the 50 exponential moving average, or the 200 exponential moving average, or the 20 exponential moving average. It can also be a trend line. So the trend line can also act as an area of value where traders take trade. The moving average can also act as an area of value where traders take trade. So, but you can also use the horizontal support and resistance level. So I take my trades from an area of value. So once I've been able to identify the market structure, if the market is in an uptrend, downtrend, or ranging, the next thing is for me to look at an area of value, which could be support or resistance level. If the market is in an uptrend, I will be looking for what? A support level to take my trade. If the market is in a downtrend, I'll be looking at the resistance level to take my trade. But if the market is in a range, then I will buy and sell. I'll buy from the support and I'll sell from the resistance. Then we'll have the E. The E stands for entry trigger. So what will trigger me to enter a trade? That is what I mean by E, entry trigger. So if the market comes to an area of value, which could be support or resistance level, I don't just rush to take trade. I wait for a confirmation that will tell me that this level is going to hold. And what is that confirmation? Candlestick rejection. Once a price comes to an area of value and gets rejected, I'll wait for the price to close with a wick. Once the price closes with a wick at an area of value, that is when I am expected to take my trade. So that is why I call it the entry trigger. So if price comes to a support level, if the market is in an uptrend and price comes to a support level, what I will do is I will wait for price to get rejected at that support level for me to take a buy trade. So this entry trigger is what triggers me to enter a trade, right? So the next E is exit when you are wrong. So what is exit when you are wrong? Exit when you are wrong is my stop loss. So that is my exit when you are wrong. That is my stop loss. So my stop loss is always 10 pips. My stop loss is always 10 pips. That is what I raise in the market. The next one is exit when you are right. Another E. So what is exit when you are right? Exit when you are right is my take profit. And my take profit is 30 pips. So that is 1 to 3 risk reward ratio. I'm risking 1% to make 3%. Right? So this is the strategy that I use to trade. So before I place a trade, these are the things that I looked out for. There are 5. 1, 2, 3, 4, 5. These are the 5 things I look out for before I can place a trade. And bear in mind that I trade the 7 major currency pairs, which is the Euro USD, the GBP USD, AUD USD, USD CAD, USD JPY, USD NZD, and the USD CHF. These are the 7 major currency pairs that I trade. So let me just show you what countries have these currency pairs. Now let's look at it very well. The Euro USD is Eurozone against the United States. When I mean Eurozone, European countries against the United States. Then the GBP USD is United Kingdom against the United States. Then the USD JPY is United States against Japan. The USD CHF is United States against Switzerland. USD CAD is United States against Canada. Then AUD USD is Australian against United States. And then the last one, NZD USD, is New Zealand against the United States. So these are the currencies of this major country. These are the top countries in the world. And these are countries that are majorly traded, right? So the euro is one of the largest currency in the world. So you can clearly see that so many European countries are using the euro. So Euro USD is for European countries against the US state, that's the United States. Then the GBP is the Great Britain, British pounds, right? Against the US USD, United States of American dollars. Then the USD JPY is the Japanese yen against the US dollars. Then the CHF and the USD is Switzerland franc against the USD, United States of American dollar. The USD CAD is the Canadian dollar against the US dollar. Then the AUD USD is the Australian dollar against the US dollar, while the NZD USD is the New Zealand dollar against the United States of American dollar. So this is the major pairs that I trade. There are 7 in numbers. Now, I always avoid the news. So this is the site for the news. I always avoid NFP and CPI. The reason why I do avoid trading the news is because whenever the news comes out, especially NFP and CPI, the price tends to misbehave. The price doesn't respect any price action. So I do myself a favor by staying away from the market. So doesn't mean I'm not going to trade that day. I might trade that day, but once it's close to the time that the NFP or the CPI will be released, I'll close my trade, and that will be the day. That will be the end for the day. I'll continue the next day. So I always avoid NFP and CPI, which are major news that moves the market. So I normally use forexfactory.com to check calendars to see the news that is capable of moving the market. So once NFP and CPI news comes out, I stay away from the market. Now I've talked about my trading strategy, which is the MAE formula. Now let us look at the edge. For you to become a successful forex trader, you must have an edge, right? The forex market is unpredictable. Nobody knows what will happen. It is uncertain. Nobody knows what will happen. So for you to survive, you need to have an edge, right? For you to survive, you have to have an edge, because that is what is going to hold you throughout. If you do not have an edge, definitely there is no way you can survive the market. How do you build an edge? You build an edge through backtesting. So through backtesting, you want to see a repetition of a price action. That gives you an edge. So looking at my trading strategy, if I do a backtest of it, you see that I have an edge. Why? Because when the market comes to an area of value, it tends to react, and I make use of that reaction. That has become my edge. If the market is in an uptrend and makes a pullback to a support level, there is a chance that the market will reverse from that support level, because this has happened in the past. So my edge is each time the market comes to the support level, I take a buy trade, because it has happened in the past. I have faith it will happen in future. So this is what we call an edge. Now have it at the back of your mind that it doesn't happen all the time, because sometimes the market can come to an area of value or support level and break below it. So that is where the risk management comes in. So when we talk of risk management, how much are you willing to risk per trade? That is risk management, because since the market is uncertain, it's unpredictable, you need to have a specific amount of risk that you are willing to take per trade. So for me, I always take 1% of my total capital. Now look at this. This is my total capital. My account size is $20,000. This is my account size, $20,000. And I always take 1% from it, so that it will take me 100 times before I can lose this money, before I can blow this account. But which, with this MAE formula, it's going to be impossible for me to lose 100 times in a row. Purely impossible, right? So for me to maintain a good risk management, I use 1% of my trading account. Now, I always have what we call 1 to 3 risk reward ratio. So what do I mean by 1 to 3 risk reward ratio? It means that each time I place a trade, I target 1% as my stop loss, and I target 30% as my take profit. With that, even if I lose 5 times and win 3 times, I am still profitable because of my risk reward ratio. So these are the things that I always consider before I can venture into trading. So my money management, my risk management, and my risk reward ratio are very, very important. Like I said, I risk 1% per trade. So this is my lot size. My lot size is 2. My lot size is 2. Now, for those of you who don't know what is lot size is the amount that you are staking per trade. So it depends on your capital. It depends on your capital. Before I do that, let's go and check different lot sizes that we have so that you will know the one to use. Let's look for different lot sizes so that you will not think of one that you are expected to use. Now we have the nano. Nano is the lowest lot size, which is 100 units. I believe that so many forex brokers are not even making use of this nano because I think they start from micro. So many forex brokers do not use nano. They start from micro. So the next one we have is the micro lot size, which has over 1,000 units. We have the mini lot size 0.10. The micro lot size is 0.01, right? Like I said, the nano is 0.001, which is 100 units. And many brokers are not using nano. So what they're using is from micro to standard. So let's pay attention to from micro because that is what brokers are using. So the micro lot size is 1,000 units. It's 0.01. So if you have a capital of, let's say from 500 down, or let's say from $500, you have to make use of the micro lot size. If your capital is $500, please use the micro lot size. Can be from 0.01 to 0.05, right? That is the micro lot size. Then if you have a capital of $1,000, then you can use the mini lot size, which is 0.10. If your capital is $1,000 or $2,000, you can use the 0.10, which is 10,000 units. But if your capital is $10,000 and above, $10,000 and above, then you can use the standard lot size. Don't use the standard lot size with a 2,000K account. Don't use the standard lot size with a $5,000 account. Don't use a standard lot size with a $500 account. Only use the standard lot size with $10,000 accounts and above. So you need to understand lot sizes for you to understand the power of risk management in trading. Now let's go back to my trading plan. You can see clearly I'm using the 2 standard lot size. The standard lot size is from 1 to over 1,000. So everything depends on your capital. People that have 3 million in their trading account can use 100 standard lot size. But as a beginner trader, if you have 20 or $10,000, you can use the standard lot size. So for the fact that my account size is $20,000, I'm using the 2 standard lot size. So with these two standard lot size, I have done the calculation and the measurement, which means that when a price moves 10 pips, I tend to lose $200, right? So that is why my stop loss is 10 pips. So $200 times 100 is $20,000. So this $200 is 1% of my 20K capital, right? So that is why my stop loss is 10 pips. So each time price moves 10 pips against me, I lose. Bear in mind that the forex market is unpredictable. Anything can happen. Losing in trading is inevitable. You are going to lose no matter what. Losing is part of trading. So don't think you cannot lose. You must lose. So what helps you is your ability to manage risk, right? Just like I said, your risk reward ratio. If I have 5 trades and I lose 3 and win 2, I'm still profitable with my strategy. So that is why the risk reward ratio is very, very important. Now, if I have a 30 pips take profit, it means I'm going to make $600 per trade. So it means I'm risking $200 to make $600. So that is 1 to 3 risk reward ratio. You can see it 1 to 3 risk reward ratio. So in all my trades, I always enter 1% of my trading capital, which is these 2 standard lot size, and my take profit is 30 pips and my stop loss is 10 pips, so that each time I lose, I know it's $200 minus $200. Each time I win, I know it's plus $600. I'm very, very specific on that. So I do this consistently, and this is what makes you a consistent winner. Once you respect your trading rules, you can clearly see how I'm taking out time to explain my personal trading strategy. This is what most gurus charge a lot of money for you guys to learn. But for the fact that so many traders are burning their accounts on a daily basis, I decided that let me take out time to explain this to you guys. Like I said, this is going to be a weekly analysis for you guys to understand trading perfectly. So now we have talked about the strategy, we have talked about the edge and the risk management. Now, what we're going to look at now is the discipline. So what is the discipline? Discipline has to do with your ability to respect your trading rules. Discipline is what will give you the, should I say, the confidence to respect your trading rules. So when you have self-discipline, you'll be able to repeat this consistently, making sure that you do not deviate from it, right? Like, this is my trading plan. With discipline, I always follow it every single day. So what I do is every weekend, every Saturday, I just explain to you guys how I trade. I'll show the market and show you how I trade for you to see that I'm always following my trading rules, making sure that each trade I take is 1% of my capital, which is 10 pips stop loss, and 30% and 30 pips, which is 10 pips stop loss and 30 pips take profit. So with self-discipline, I'll be able to respect my trading rules, making sure that I'm following my trading plan sequentially. Like I said, I trade only 7 currency pair. I don't trade any other pair. I have only one trading strategy, which is the MAEE formula. I don't have any other strategy. And also, I follow my risk management and also my risk reward ratio. So I don't care what the market does. I don't care if the market moves 500 pips. I don't care if the market moves 300 pips. All I need is 30 pips and I am done, right? So that is what I mean by risk reward ratio. So if the market moves to my take profit, if I want to trade again, I will wait for the price to come back again to an area of value and I will still maintain my trading plan. So that means I can take up to 3 trades in a day because I have 7 pairs which I monitor. Have it at the back of your mind that trading has to do with patience. You have to be patient enough to wait for what? For the price to come to an area of value. Most traders are impatient. They don't have the patience to wait. They are always in a hurry. That is what makes them to go and be trading gold. There's a video I did and I want newbie, stay away from gold. Do yourself a favor and stay away from gold because The gold market is highly volatile. So if you want fast profit and you go to gold, you don't know what happened to your capital. So that is why you have to stick with the major pairs, which move slowly. They say slow and steady win the race. So the earlier you know this, the better for you. Follow the market that are slow so that you can slowly become a pro in this business. If you go and trade gold, one day, 2 days, you blow your account. And these are the people that end up calling forex trading a scam. So as a beginner, stay away from gold. Focus on these 7 major currency pairs. Because these are what will help you to become profitable in the forex market. So these are the things you need to understand as a trader, because I say today is going to be our first episode, right? I'm going to take time to explain my trading plan for you guys to understand how I trade. From next week, we are going to be looking at my trades, right? I'm going to show you the trades that I was able to take, the exact area that I was able to take my trades, so that you guys will understand how this business works. Now let's go to the chart and let me share some information with you guys. Now I always trade with the MT5 desktop version. I don't use trading view. I prefer to use the MT5. Every trader has their choices, right? But I prefer to trade through the MT5 because that is what I love. So I trade with the MT5, MetaTrader 5 desktop version. So I normally arrange my pairs sequentially. You can see the GBP USD, Euro USD, USD CHF, USD JPY, USD CAD, AUD USD, and NZD USD. There are 7 in number. 1, 2, 3, 4, 5, 6, 7. So if you open it individually, you can see that the market moves differently. The market moves differently. This is the GBP USD. This is the Euro USD. USD CHF. This is the USD JPY. This is the USD JPY. This is the USD CAD. This is the AUD USD. And this is the NZD USD. So what I do is every 1 hour, I look at the pair to see whether if the market has entered my area of value. I normally use the 1 hour time frame for my technical analysis, but I use the 15-minute time frame to enter my trade. That is to say, I use the 1 hour time frame to identify area of value like support and resistance. Why I use the 15-minute time frame to enter my trade? Because by using the 15-minute time frame, I can be able to properly enter a trade with 10 pips stop loss, right? So with the 15-minute time frame, I'll have a tighter stop loss compared to entering trade with the 1 hour time frame. Now let's look at NZD USD. Now, if you look at this line, this is all right. If you look at this line, this is what we call the separator. This is the line that separates the day, right? This is 1 day, 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 this 1 day. So if you have the desktop version of MT5 and you want to know how to add up this line, because this line is very important, you simply go right click at your mouse, go to property, and then go to setting, then show, and you look for show period separator. This is it. So you see it's show period separator. You simply click it, because if I click on it, I've deselected it. So if I click it, I've added it. You can see it. So you can, this is where you add it all. It's very important. So you should learn that. So once you have this separator, it helps to demarcate or differentiate days, right? So from there, you know days. Now, this is 1 day, this is 1 day, this is 1 day, this is 1 day, this is 1 day. So this is Friday, this is Thursday, this is Wednesday, this is Tuesday, and this is Monday. So this the starting of the week, and this is where the week ended. So you can simply use your horizontal line to map the areas. So this is where the price reversed. So this is clearly a resistance level, which might become a support level in future. Then this is clearly a support level. This is a support level. So if you zoom out your chart, you see that the market is clearly in an uptrend, but the market is consolidating here. So the market was formerly in an uptrend, and then when it got to this highest high, the market began to consolidate, right? So this is what you need to understand. I always use the trend line and the moving average when the market is trending, and I use the horizontal line when the market is in a range. So this is horizontal line. This is the horizontal line. I use it to connect the lows and the highs, right? So if the price comes here, I take a sell trade. If the price comes here, I take a buy trade until price breaks above this level. If price breaks above this level, that means the uptrend continues, right? So if the price breaks below this level, the downtrend begins. So for the fact that the price has not been able to break below this level, the uptrend is still in progress. So those that are buying still have more chances than those that are selling. So buying from here has more advantage than selling from here, because it's likely the price might break above this level and continue going up, since the market is clearly in an uptrend. So if the market is in an uptrend, you can use the moving average. This white line is the 50 exponential moving average. So what you normally do is, if the price breaks above this 50 EMA, you wait for a pullback to the 50 EMA. So the breakout shows that the trend have reversed. You wait for a pullback. So when the price makes a pullback to the 50 EMA, you now take a buy trade. So you can see here the price makes another pullback to the 50 EMA. You cannot take a buy trade. Another pullback, you take a buy trade. Another pullback, you take a buy trade. The price now breaks below it and began to consolidate. So if that price crosses above and below the moving average consistently, it means the market is in a range. This is how we know about it. If you watch from here, you see that the market is far away from the moving average. Each time the price comes to the moving average, it gets rejected. So the moving average is acting like a rubber, like a support level, like a rubber. If the price trades up, then comes down to this moving average, it gets rejected. Something like this, the price trades down, get rejected, trades down again, got rejected, trades down again, got rejected. So this clearly means the market is clearly in an uptrend. So with this, the moving average is perfect. The strategy is perfect. You use the moving average. Each time price comes to the moving average, you take a buy trade, right? Because the price is clearly in an uptrend. So the moving average in this scenario is acting as a dynamic support level, right? So now, if the price now began to range, the moving average becomes worthless. So here, the moving average is worthless. From this place to this place, the moving average is worthless. So what you should be using is the horizontal support and resistance. So this is the previous high, which has now become a support level. So this was previously a resistance level, because this is where the market reversed from. The market got to this point and got rejected, forming a high, right? So this was a previous resistance level, which has now become a support level. So you can clearly see the line. So this is where the price is now receiving support. You can see the price came here, got rejected, right? The price came here, got rejected, came here again, got rejected, the same thing, got rejected. So definitely buyers will be taking their trade from this level until the price eventually breaks below it and a downtrend begins. But sellers can be taking sell trade from here, but it is not advisable to do that, because the market is clearly in an uptrend. So there is chance that the price might break above But if you are taking a sell trade, make sure your stop loss is very, very close before this support level, because this is where the market tends to reverse. If you are taking a sell trade, make sure your take profit is before this line. And if you're taking a buy trade, make sure your take profit is before this line, right? So this is how I trade the forex market, because if you watch this one day, this one day, this one day, this one day, this one day. So now this now shows different days, right? So I might be able to identify an area of value using my horizontal line, just like this line. I can use it to map this level, which was previously a resistance level, and price broke above it. This is where price broke above it, because if you watch, price came to this level, got rejected, came back again to this level, got rejected, and finally broke above it, right? And then began to act as what? Then broke above it, and then the level began to act as what? As a support level. So once I plug in my horizontal line and I see that the price is respecting this level, what I would simply do is to place a pending buy order at this level, right? So for the fact that the price is respecting this level, right, I'll just simply place a pending buy order here, right? When the price comes to the level, it automatically trigger my pending order and the price goes up. The same thing here. But if I have the chance to monitor the market, which is the best, I will always be looking at the market every 1 hour to know whether the price has gotten to my area of value. So this is how I trade the forex market. So this is just one example. So we're going to continue next week, Saturday. And next week, Saturday, I'm going to share my weekly trading analysis. The trade I took from Monday to Friday, I'm going to analyze them thoroughly and share it with you guys. So take our time to master everything that I've taught you in this video. And I promise you, you are going to learn trading through this channel. Please don't forget to turn on the notification icon to be notified whenever I drop new updates.